we're down to about 4 million homes sold in the most current reading. And so, as a percentage, that is a very steep drop.
Nasty headlines out there about appraisers. And we were there just unable to defend ourselves. Getting the experience to become an appraiser has sort of been a walled garden and only controlled by existing appraisers. And if they are unwilling, you can't make them willing.
I really don't believe would ultimately be, promote the public's trust in the appraisers and in the appraisal profession.
Episode 47 of Market Moves with Mark and Jeff, two uninteresting guys talking about interesting times. Since we met last week, Jeff, a lot has gone on the world stage in really tenuous weekend with what turns out to be of kind of bombing of nuclear sites in Iran and all sorts of stuff that we don't cover a whole lot of here. But I think the peak and the trough of nervousness is really on display over the last 6 or 7 days when this sort of stuff is going on, and it's this boots on the ground, the U.S. getting into war and all these sorts of things that are out there. So, really concerning. But I think as we sit here on Friday, we're recording a day later than our normal goal of recording is. Friday, June 27th, we've got what seems to be a total de-escalation of the Iran situation. And the market just seems to be a little bit relieved that a threat that's been around for a long time is somewhat neutralized. I've seen some peace deal brokerage or talk in Israel and Palestinian stuff and all the stuff that I don't know a whole lot about. But Jeff, even surprising, under President Trump and Howard Lutnick's breath, they are saying that, oh yeah, a couple of days ago we inked the deal with China, the tariff trade deal with China. Like, what? You did what? So if all of this is the case, this is a lot of providing some certainty in some areas that have really provided a lot of uncertainty globally and in the U.S. market.
Well, so much of that uncertainty gets priced into the markets, Mark. And some of the podcasts that we've liked and followed have almost can't help but talk about politics and just world events because they have such a direct impact on the market in which you operate. And if you do anything that is impacted or cares about interest rates, it's hard not to totally separate. I don't think you can separate the impact of these world events and politics and political decisions. Early on in my career, I'd listen to some talk radio stuff while I was out driving around, to houses and stuff. And I got burned out on that pretty quickly because it became very apparent that at least in that segment of the media, it was just my side good, your side bad. And there wasn't a whole lot of nuanced discussion of topics. It was just a lot of name calling and, this side's stupid because of that and that side's stupid because of the opposite and whatever. But it really is hard to understand, what impacts interest rates without understanding, is there a lot of uncertainty in the market right now, or are we moving to a place of less uncertainty? And, markets and interest rates respond to that sort of thing. And so it's been interesting to observe the relationships there. I think we kind of find ourselves in the same place, Mark, of not being able to totally ignore some of the world events and political events that are happening. But, my primary interest is what impact does that actually have that cascades to interest rates, to the market for real estate, and that sort of thing. But it's pretty complex and it's pretty interwoven.
It is, I think, pretty clear to me. I'm sure pretty clear to a lot of the listeners is like this sort of Trump doctrine, both in the first term and this one, is like peace through strength, but strength often defined as like chaotic, bombastic action or language or whatever, and then sort of backing off of it. And when the dust settles, like, okay, we're a lot better off maybe than we were when we started on a particular topic. Not always the case, of course, but it does feel like a little bit of that happening where, and I think this really translates back to the U.S. housing market and what you and I and a lot of our listeners are living through with as real estate professionals is yet 6 more months, a half a year more of uncertainty out here, that we're just sitting with rates hovering around 7%, an unenthusiastic participation in the market from buyers and sellers, just dwindling transaction activity. It's just, let's just get this stuff behind us. Can we? Or it's all crescendoing. It's not like it's getting better. And I think over the last 6 or 7 days, Jeff, I have felt like we're getting a little bit of resolution. And I think the most important one of those is some under the breath notation of the trade deal with China. That would be enormous news. And I said to you in our show Slack channel, what on earth are they doing slow rolling this? Like, why would you do that? Especially knowing the pain that this causes so many people. Why would you be slow rolling? And my guess would be that they're wanting to lay out all of the deals at once that they've got in place. They said they were working on a deal with India and in other major trading partners. So anyway, Jeff, I think we're finally a little more towards stability side of the equation than more unstable.
Well, boy, we would love to get to that place. I don't know if this is a more cynical view or not than yours, Mark. I do wonder if part of the reason that they haven't announced like formally or made a big deal about it is if it's not totally signed, sealed, and delivered. I mean, have we signed on our end, and then China's, like got the return signature in the mail kind of a thing? I don't have any like knowledge of that actually being the case, but my perspective is it doesn't seem like it's the administration's like operating procedure to hold on to good news and not not put it out right away and that sort of a thing. So but that said, I'd be really surprised if it didn't land a deal that was something that led ultimately to the stability. The fact that it hasn't been trumpeted in a very public way yet does make me wonder. I mean, is there still something yet to be done, or is it really signed, sealed, and delivered? But either way, that it's moving that direction or maybe is already there, I think leads to the stability that you're talking about. Because without that, that's just been a huge unknown of, are these it's this 90-day reprieve going to kick back to 100+% tariffs, and what is the chaos that ensues from that? I think that's very unlikely at this point, but you always feel a little bit better about it when the money's in the bank as opposed to just checks in the mail kind of a scenario.
Jeff, I have got the next podcast idea here. It is a candlelit reading of The Art of the Deal in our best Trump impersonations to see if signing first or last is part of the strategy there one way or another. We'll see. We'll see. I mean, it would certainly feel better if China was coming out and saying, yes, we have agreed to a deal, and I don't think we have that as we're sitting at it. Well, Jeff, we've got a number of things planned for the episode today, including some predictions, given that we're beginning the second half of 2025 in housing and some other areas. But as we're talking about world events and how they're maybe connecting to the real estate market, I thought we'd jump to the just housing in general here first. If you're all right with that, I know as in typical fashion, we've got some slides that are geared up. Maybe it's because of a little bit of the positive news, and maybe I'm overreacting a little bit, but there have been some troughs of expectation from the market that we've seen all throughout the last couple of years for whatever reason. And I feel like we may be exiting one over the last 30 days or so. Rates kind of sticking up, and Powell not helping us with different rate commentary, and sales really declining. You see inventory rising, all these sorts of things that are happening. And in any data that we'll talk about and show today is going to be highlighting that, because it's all, looking backwards. And so I think we should review some of that. But it does feel like in the moment that maybe, we're on the uptick from that trough of expectation or forecast. So I don't know. Maybe it's just Friday and I'm excited for the weekend and feeling a little bit more optimistic, Jeff. But there's where my mind is right now.
That makes sense to me. Is this the one you got in mind, Mark?
Yeah. We've got several. Yes, for sure. This is one we spoke a little bit about this on the podcast last week. Here we are. I think it was 34% more sellers than buyers in Redfin's,
Yeah.
ethos or whatever. And I think I had seen a stat that had gotten even worse the following week. But here you see that the inventory is continuing to rise. On some level, this is not a bad thing. But buyers are, in fact, the where I saw this graph posted, the comment was that you got a lot more people putting their properties on the market, but nobody cares. So I think that's where we are right now.
Well, I think this will lead into some interesting context as we think about, predictions of what might happen between now and then. But, we've been talking about this change in the trajectory for, the last, 5 years. It feels like it's been not enough housing, too many buyers, driving prices up. We see an inversion or an inflection point here. And the question that everybody always wants to know, and that's so hard to answer in real time, is will this continue? Is this a blip that then self-corrects? And it's just really hard to know that. But right now, we are seeing a marked change in the trajectory of how many sellers and how much inventory sitting out there versus how many buyers. I keep thinking back, Mark, to that stat that we saw, the poll on people's sentiment, and citing the main reason for sitting on the sidelines as home pricing being too high. Home pricing changed more gradually than interest rates when they, skyrocketed up in a couple years ago. And yet, reportedly, the buyer's perspective that the price of the home itself is the issue and the pain point there. And so, if this starts to a trend downward, I think you'll start to see some transactions pick up. We're seeing just a little bit of relief on interest rates. I mean, not anything that's moving the needle a ton, but at least a very gradual softening. And that always seems to drive volume whenever you get a little bit of relief, telling you there's demand on the sidelines. It's just waiting for an affordability event to happen one way or the other.
Yeah, absolutely. I'm excited to have some discussions around some of our housing predictions in the second half of this year. I'm wondering if we'll be on the same side of predictions or a little different, and maybe some reasonings why, whatever it ends up being. But yeah, Jeff, I see that. We have several slides here from the National Association of Realtors that are showing that declining total sales, certainly in existing homes. That's just been dwindling, and here recently, just when you thought it couldn't get worse, you've got the last 2 quarters of it getting worse. So it's been ugly, So there's part of that, Jeff. I think the jumping to the median price of these home sales, we were talking offline. You had made this point that $366,900 in May of 2021 with the median home price of existing sales, and it only being $423,000 in May of this year. That represents about a 16% increase, but from almost the beginning of COVID. And you see a pretty flat median price over the last several years, Jeff. And I talk about that in detail for anyone that's listening in. Was talking to a couple of listeners this week that they'll often just listen and not watch. I think I don't do as good of enough a job of describing what we're showing when we're doing it. But yeah, I don't know, Jeff. I look at the median price movement, and it doesn't seem that drastic from May of 21. And then it seems, kind of remarkably steady over the last little bit. What do you make of this?
Yeah, that really stood out to me. This is a report published just recently by the National Association of Realtors, like you said, and I was expecting there to be a steeper increase in the median sell price that was reported here. And I think your perspective or context of, $366,000 median price in May of 21 up to the $422,000 price on a percentage basis is meaningful. I think our lived experience over that time is that there were periods where where things have appreciated more quickly, and we've now kind of come into a period where, in most markets we're not seeing that appreciation. I do think it's always a little bit tricky when you're looking at national data because, as you and I have highlighted in multiple episodes in the past, the market in the Sun Belt and in the South looks different than it does in the Northeast in terms of inventory and pricing directions and that sort of thing. And so, this is very high level national data. And if you were to break it down on a market, level basis, it's probably going to tell a different story. But knowing what I've seen of headlines and just kind of lived experience, I thought that the median price would have increased more than what it's reported to have here with NAR's data, from 2021. One other side note that's kind of interesting, Mark, I'm sure you see this too. For anybody viewing, you can see kind of the cyclical or almost a wave look, to this. And, I always hear of seasonality in the markets, and you see it in terms of transaction volume, but it's hard to look at data and not observe that there are times of the year, it appears, that that homes, may actually just sell for more or less, depending on when that is. And that was one of the other trends that stood out in this. It's pretty consistent year over year that there's an increase and a decrease depending on the timing of the data.
Boy, I am glad you brought that up, Jeff, because it is very clear there. That is a very prominent kind of pattern, is the peak and the trough depending on the season. Generally topping out in the spring, as most of us that are familiar with the market would know. One other thing I'll say about this chart is that I don't think that NAR did I think it's a little misleading if you don't read into the numbers. I think what is throwing both you and I off is that you've got a 16% change that almost looks like no change because of how the range of prices is presented here. So I maybe a lesson in poor graphic presentation.
Well, they would be well served to listen to us, and the weight that we have with our graphical presentation, as we're stealing. At least we're giving them credit for it. But
yeah.
But that is a good point. The way it's presented does make it a little bit hard to extrapolate a few of those things. Mark, I had one other just quick observation on this other data in terms of the volume. It's top of mind in part because I was on a phone call earlier this morning with one of the representatives from Freddie Mac, and he had just, a totally different topic, but had just kind of made an offhanded comment about COVID years being incredibly busy and hard for appraisers to keep up. There being, from their perspective, a legitimate shortage of appraisers in that era, but then acknowledging, boy, in the last couple of years, transaction volume has been at decade level lows, which you and I have, commiserated on, kind of ad nauseum at this point, I think. But this number of, and these are existing home sales, but this number of home sale data is, interesting to me, Mark, that it peaked at about 6.4 million homes sold in 2021, and we're down to about 4 million homes sold in the most current reading. And so, as a percentage, that is a very steep drop. And this, if you were to trend line it, it shows a much more exaggerated fall off in the total number of transactions. And I've been wrong for a while, but I thought, man, if the transaction volume drops as much as it has, you'd expect pricing to follow suit. That hasn't really been the case, but it was just notable how big of a difference we're living. Whether you're doing appraisals for mortgage work, you're an agent out there trying to drum up the work, you're the lender trying to do the loans. There are just far fewer transactions going through the system than there were 5 years ago. And this data bore that out. And a comment from a friend at Freddie had kind of just emphasized that, yeah, that's certainly been their lived experience as well.
Jeff, this will maybe lead into to the graphs we have at the beginning of our PowerPoint on our friends in the new construction side have definitely picked up the slack in this. And when you aggregate existing home sales and new construction home sales, it'll level out a little bit more. It's not at the very bottom that you see there, but in what we've talked on this podcast, I think that typical percentage of total transactions, it's like 16 to 18% new construction in a normal market, but it's been 35 or 40% over the last year or two. Just an enormous amount of activity from the new construction builders that are trying to meet that affordability problem where folks don't have, goodness, it's all around me in the suburbs of Houston. I see it everywhere. In the markets that our company covers, just a ton of building, and most all of it is trying to reach that buyer that is priced out of the existing home market. So it's been a really good time to be a builder, despite COVID costs, supply costs, and all of that. Even the rates have almost worked to the advantage of the builder, because they can buy down the rates, and there's room to do it because prices have gone up so much, even as compared to supply costs. So it's been a really good couple year run here for builders. But we have a couple of charts here. The first one is Lennar's average price per home sold continues on a decline here, and it's just notable that is continuing to happen. It certainly is not getting better, and I think the boots on the ground experience that both you and I offer will corroborate this continued trend here. I don't think there's panic from the builders. It's just not as good as it was 12 months ago or 6 months ago. I do think maybe a little bit of concern of building into this environment, but I kind of suspect a lot of them are fairly optimistic with some of the certainty or uncertainty relief that maybe they are seeing in the macro market, and maybe thinking a little bit more reliable market and more active market coming up soon. Before we have one from KB Homes too that's showing something similar. Jeff, I don't know if you wanted to comment on the Lennar graph that we have.
Yeah, you bet. So the only other observation, and you made the comment, Mark, about building into the kind of this inventory. I had a conversation not all that long ago with a representative who manages kind of the appraisal and lending side for one of the other big national home builders, and he basically made the comment that that D.R. Horton is continuing to build into this inventory. They've got standing inventory, and I don't know if it's a problem, but it may become at some point. But he's like, the reality is a builder builds homes, and so it's kind of hard for them to pump the brakes, even if the market maybe starts to turn, just a little bit. And so I'm not seeing massive rising inventory levels on their part, but I think that the expansion of the concessions and stuff that they're offering to try to move inventory is a sign that, hey, we don't want to stop building unless we have no other choice, but we'll do what we have to be able to keep building and move homes, even if it's at a lower median price point, like what is being shown here with the Lennar trend, and at compressed margins, which I think is what we'll take a look at next. But the reality is, they would rather operate on a lower margin and continue operating than just stop building, because that's death for a home builder.
You bet. Yeah, Jeff. So as we show the KB, we see margin compression here, which is kind of the stuff we're talking about, but an interesting chart to see nonetheless, with fairly recent data from our good friends that don't know who we are at Resi Club. But really nice stuff and updated here to show that margin compression. The compression is not nice stuff to see, but interesting. And all of this feeds a report that we got this week that is new home sales change month over month of a negative 6.7% drop in activity from month to month came in at negative 13.7% in dropped activity. So I think that is from March to April, I believe that is. Well, no, I'm sorry, April to May. So nasty stuff. And this is what is sort of informing my perspective of I hope we're coming out of, but we're right around that trough of sentiment going forward. It's just been a nasty start to the summer, is the way I look at it. Boy, wasn't that long ago where we were pretty optimistic about the summer, and that has all gone to hell.
Well, such is the world that we live in post-COVID, apparently. But the one other thing I observed here, Mark, on this graph, and I'll follow in your lead, we'll try to articulate what I'm visually looking at for those that aren't seeing the screen. But at its very worst peak, the profit margin for KB Homes coming out of the great financial crisis got down to about 5%. It gradually worked its way up to north of 25%. And this compression that we're talking about coming out of COVID, it's now under 20%, kind of 19%. it's a lot of up and down movement here. So the at least the data here for KB doesn't seem to move in a real smooth direction. And it just makes me wonder as I look at this data, margins worked their way up above 25% in about 2005 before it fell off a cliff down to 5%. This might, I don't think it is, but I mean, this could be the start of another precipitous drop down under the 15%, profit margin area, which is, kind of a baseline where it hasn't been below except for in really depressed times. I don't know if this is the beginning of a trend or if it's just kind of the marked, very choppy direction that this profit margin seems to go, but it's definitely been on the downward slide, coming out, it's basically tied right to when interest rates, kind of doubled and plus, went up significantly. And so I don't know where it heads, Mark, but it's always interesting to watch these things and see, are we on the front end of a big drop, or is this thing kind of level out where it's at?
You bet. You bet. Well, switching gears, Jeff, if you're up for switching gears, first is just an update or news item that I wanted to make sure we talk about, mostly because lawsuits are headline getting and bombastic. The procedures that follow take months or years to play out, and really is where an understanding, so far as the public can understand. But our podcast talked about a really big, splashy, concerning lawsuit from former CEO Cindy Chance to the Appraisal Institute. We had talked about that a couple of podcasts ago. Wrongful termination, sexual harassment, and I think some fraudulent accusations. I'm not sure if it was that lawsuit or not, regarding test administration and that sort of thing. So an appraiser, we've got a lot of desktop journal. I don't know what it is, but we have a lot of appraisers that are participating in a lot of current events these days, specifically around the Appraisal Institute. I think that's good. Both sharing concerns and otherwise. But Ryan Hargrave was someone who I don't know, but is sharing some lawsuit updates, and I'm appreciative for that, because I certainly wouldn't see them otherwise. Had noted both that maybe minor, I don't know, that Cindy Chance has filed a motion to switch lawyers. I think there isn't a replacement lawyer yet at the time of this, but just notable. But also curious to me that they can always be refiled, but the harassment charges, sexual harassment charges against former President Craig Siley at the Institute were dropped. So, or not being pursued. I don't know exactly what all that means, but if we only talk about the lawsuit, Jeff, I feel like we are just as guilty as all the other headline getters to only talk about the stuff that really gets a reaction. And as we can and as is useful, I think we'll provide updates, to see where we get here one way or another.
Yeah, I'm glad you brought that up, Mark, because it is easy to get caught up in a headline. And when something is news and is unknown, dropping of a lawsuit certainly fits into that category. It gets attention, but then the people tend to form an opinion pretty quickly. And, oh, well, there are these allegations, probably is true. Why would you file a lawsuit if it wasn't, right? And then you kind of just go on with your day. And I think we've experienced that a little bit, where it's like, okay, here's what's going on. But then there's so much fact finding and due diligence, and it takes sometimes an inordinate amount of time to work through the process. And there are some inefficiencies there that I think are frustrating and expensive to navigate. But there's also the reality that at least there's a process to flesh out what is actually true and not. And, so from a certain perspective, I can at least respect the fact that we have this due process that we go, that we go through. And of course, civil and criminal are different, and there aren't the exact same standards applied depending on the nature of the legal action. But it's way better to get all of the facts discovered and known than just to base a decision in the court of public opinion that says, well, this person accused that person of something, and I'm going to side with one side or the other. The fact that all of this diligence ends up being done, I think, I hope, but I think leads more often than not to the right outcome, or at least an outcome based on fact and truth, as opposed to just initial allegation. And I don't have any special knowledge of what's going on in this particular case, but it is worth just highlighting that, hey, things have changed fairly materially, I think, from what was initially filed, and noteworthy if nothing else.
Yeah, Jeff, boy, totally agree. And I think the following comments are not at all directed around this case with Ms. Chance and the Appraisal Institute, but generally around the thought that headlines are shortcuts for people to make conclusions, and particularly as this relates to appraisers. And we are sort of fact finders by nature. We are not headline getters. We are not very good with the spotlight on us. And I really think about this as it relates to PAVE. Like, there were so many nasty headlines out there about appraisers, and in quick conclusions jumped to by a lot of the public, and we were there just unable to defend ourselves. And I think about the Appraisal Institute. This is way before my time and yours. I remember a lot of headlines with the Institute not being part of the Appraisal Foundation for a period of time. And, I thought that, facts may or may not have mattered much in it, but there were headlines that were just not good, certainly for the Appraisal Institute. And mostly that's what mattered, I think at the end of the day. And so I think this is probably true of a lot of cohorts like appraisers, that are just going about their business, are not particularly equipped to deal with social media and headlines and all of those things. It's just a tough environment to live in. And, I feel this a little bit as an appraisal in residential mortgage. It's a tough place to be sometimes. Like, people for 20 years, 2 decades have thought that we're going away, that we're form-filling monkeys. Part of conversations this week where leaders in the industry are kind of like, well, you can do that for residential. They could deal with that. That's not a big deal, but don't do it on commercial. And it's just the sentiment that is always everywhere. So anyway, I maybe we can do better. Maybe we are destined to not be able to, because of what our natural skill sets are.
Well, it's interesting that you mentioned natural skill sets. Sometimes I think appraisers are accused of being subhuman, but appraisers are actually humans too, and so it's really hard to overcome the human tendency to jump to a conclusion, even when you're trained and kind of by training and skill set. No appraiser is going to just take somebody's word that, hey, this same house as mine sold down the street for $500,000. Therefore my house is worth $500,000. No appraiser is just going to rubber stamp that at face value and say, well, they said it, so good enough for me. They're going to do their due diligence to say, okay, did that actually sell for that much? Is it actually the same as this house, that I'm appraising now? They're going to dive in and find the facts before they come to a conclusion. And it may be that as they go through the process, they come to the exact same conclusion. Yep, turns out that all of that checked out and was exactly right. My experience has been way more often that the neighbor knows about the home that was listed at $500,000 but didn't see the price reductions, and then didn't know that it actually sold for $425,000, and didn't realize that house is bigger and has a pool. It's better than yours, that you're then appraising. It's just there's so many nuances where the facts of a situation really matter, and an appraiser would never not do their diligence in that kind of a setting. And yet I've seen a whole lot of appraisers, calling for heads and jumping to a very rapid conclusion based on the headlines of what's come out, without having the facts, without things having run their course. And whatever turns out to be the truth in this particular case, so be it. I don't yet know what it is, but it always struck me, Mark, as being premature to say, this person's right and this person's wrong, one way or the other, without going through the process. It's boring, and it takes a long time, and it's not exciting, a year down the road or however long it is before you actually have the facts that are borne out. But that's really what has to happen to come to an equitable decision. And it is, but it's just notable that, things take turns along the way. And I don't remember who it was, but kind of a seasoned litigator commenting on this specific lawsuit, was kind of just, urging, like, a pragmatic approach of, look, things are going to happen. There's going to be information that comes out. This is not going to turn out the way that everybody thinks it will based on an initial, lawsuit filing or something. And they, they've turned out to be pretty right so far, having lived this kind of scenario a lot of times.
You bet. Yeah. Yeah, totally true. I think human nature, especially on important topics or polarizing topics, it's human nature to want answers now. I want to know the truth, and I want to act on the truth, whatever that is, whatever the topic is. And I want the entity or person involved punished if they're in wrong, and I want that to happen really quickly. But it's often not possible to get those answers really quickly, and it just isn't human nature. So we're always battling against ourselves, I think, to not jump to conclusions. So anyway, consider that an update in public commentary on the state of things and the appraiser's position within the state of things.
Well, so along those lines, Mark, or pivoting maybe to a little bit of a different topic, but interesting as we're thinking about headlines and the impact that they have on the public's perception of a particular topic, news story, whatever. There's one thing that I wanted to bring up that has been kind of interesting, as one of the things that's happening in the appraisal space is the body that oversees what it takes to become an appraiser, the qualifications board, the AQB with the Appraisal Foundation, has been doing a deep dive into what does it take to become an appraiser? What are the current criteria requirements? Are they adequate in today's environment? Should they be adjusted or adapted? And I wanted to get your perspective on one proposal that I've heard talked about at some of the public-facing meetings. And I think that I've heard them say that they're kind of open to considering like all options on the table. Now, I don't think that means that they're necessarily looking to scrap everything that has worked in the past, but I think I read it as just them saying, hey, we're taking an open-minded approach to what really works best for helping people get certified and licensed to be appraisers. One of the pitches that I've heard talked a little bit about, it's interesting, is the idea of eliminating an experience requirement altogether. This was talked about the public session of Board of Trustee meeting that I was at recently, and I'm sure in other settings as well. But curious what you think, because currently there is a requirement to get a certain number of hours to get licensed or certified. And so one of the discussion points has been, or one of the proposals, maybe is, well, what if we just make somebody take education and pass a test like some other professions do? Can't that or shouldn't that be good enough? Curious about your take on, is that ultimately a good direction, a bad direction, or does it matter?
It's an interesting question, Jeff, in a bold question to be asking. You know what I mean? I would not have thought that something like that would be on the table in you and I's like career. I mean, it's and really coming from a place for the first 15, 20 years of my career, like I'm not here talking about change within an industry. I just sort of operate from under it, and so I just I haven't thought about that much. And wow, this is like a foundational thing that, appraisers got to get educated. They got to pass a test, and they got to have experience underneath a supervisor. We have spent a whole lot of time on this podcast. And in fact, it was the genesis of the podcast was talking about the inaccessibility of experience to people that want to get in. What does that mean? That means that I need experience to become an appraiser, because the only way to get it is to find a supervisor, a current appraiser, willing to sponsor me and sign off on 1,000 or 1,800 hours of work, and then be available to answer for that work with the state board. That's tough, and it has proven to be wildly tough. And you add to the fact that the appraiser is already pretty concerned about the future of their own work and viability. They don't want to train their competition, so there's a lot of concern as it relates to that. And so getting the experience to become an appraiser has sort of been a walled garden, and only controlled by existing appraisers. And if they are unwilling, you can't make them willing. So you're just sort of stuck there. So I think rightfully so. The market and regulators, stakeholders have looked at that inaccessibility of experience. I've talked about the anecdote that has been serious for a long time as I've interviewed trainees and whatnot. But I didn't want to hire somebody or consider hiring somebody if they hadn't been looking for a sponsor ineffectively for 12 months because they didn't know what I was offering and where it was. And I just wanted them to stick around, to see them through to licensure when I was looking at that. And so that was a real sign of the times from my perspective. And it's certainly a common experience. So in comes PREA and the proliferation of the practicum, which I think was an option around for a long time, but nobody really used. These two things are working to make experience accessible if someone chooses to access them, not this walled garden and having to convince an appraiser work for free for 12 months or even pay somebody to work for them for a long time. So, Jeff, I think that a lot of bold strides have already been put together, and they are in their very beginning stages of kind of seeing the effect, trying to figure out how to make them more available to folks. But it is succeeding in that way. And I think it's probably an overcorrection to think about doing away with the very experience you're expanding access to without seeing the effects of the experience expansion, or pathway expansion. So I've got more thoughts, and that's long-winded already. But I'll pause for a minute to let you get a word in.
It seems like not a bad strategy to just tee you up with a question and then get out of the way, Mark, and then I don't have to sound.
You'll stay out of trouble that way, Jeff.
Well, yes, but if I can get you into some trouble, that makes it a little bit more fun along the way. No, I mean, I'm not surprised that we have kind of a similar view. I would, in addition to what you said, just point out that there were people that were ready to call PREA dead before it even got off the ground, and even some within the institute that's had the only approved program, still does to this point, though I know there are others, in the works and maybe getting close to being released. That said, well, this isn't an overnight success, so it must not work. It's a financial drain and all of that sort of thing, while there's, like more demand than there is capacity to meet it, at the same time. My concern has always been that we need to accomplish two things. We need to remove unnecessary barriers to entry, this walled garden, as you describe it, where the unnecessary barriers, should be removed. But we have to accomplish that while maintaining and not compromising the standard of professionalism, of knowledge and skill set. And it's really hard to just take theoretical based qualifying education, pass a test, and then know what to do in the context of actually performing an appraisal, delivering that appraisal. We just yesterday did a training for the Experience Review Committee in our state of Utah that reviews experience that is submitted by trainees to get certified. And the challenges there are trying to get the experienced reviewers on the same page, looking for the same things. You don't always have even consensus as to what good quality is versus not. But what I do know is just taking education and just passing a test does not leave somebody qualified to write an appraisal report that somebody else is going to read and believe necessarily. And so I think it's the challenge. You stated it well, Mark. I think it is a bold consideration. I like looking at things, in kind of a bold and a new way. As I've thought about this topic a little bit, though, I kind of land on this side of, let's see how these other programs, work in the market before we totally, jump ship. And with PREA, you don't have to find somebody that you don't have to have a relation that might not have a financial incentive, but an additional incentive to kick you out of their basement or whatever reason they might be to take you on. I can do PREA. There are an increasing number of practicum courses around the country coming available. I think the experience that is gained there is quite valuable. I think you had cited, or I've seen it cited somewhere, that pass rates for those going through the PREA program, so far as I know, are 100% on the first time of taking the certification exam, in an exam that historically has a very low pass rate, as exams go. And I don't know what the numbers are off the top of my head, but
60%.
there are signs that this is working.
Yeah. Yeah. 60%, Jeff, is the typical
Yeah.
pass rate. So 100% of the 40 that have graduated from the Appraisal Institute's Korea program. I think they've got maybe another 70 plus, maybe 100 plus in the program right now, a lot on a waiting list. It's not flooding the market. Takes a while to get through the program, which I think is a fairly important component. Yeah. And, we've interviewed some folks that, maybe not the original intention, that they're off on their own working and doing a pretty good job doing it by their own accounts. And by kind of assessing the anecdotes that they're providing, I think are probably doing a pretty good job on a lot of levels. So off to a good start. Not fixing the ebb and flow needed of the 75,000 plus appraisers that are around the country, but yeah, I think an interesting note, and those considering experience will cite and think a lot about. So let's say 1990, Jeff. I don't know the exact time. I was not appraising before this time. But licensing was introduced around 1990, somewhere around there, right? Plus or minus 2 or 3 years. And in the 80s and before, there was no licensing. And so designations were one way that someone could show their abilities, and salesmanship and kind of proof of work, right? And so the market regulated itself on these sorts of things. And I think did a pretty good job, save a few problems, that may have created the need for licensing. I don't know. But the assessment of experience was outside of structure. And it was up to a lender or a user of appraisal services to do that. And then it was up to the appraiser to sell themselves, as I understand it. Didn't appraise at those times. We sort of lack those skills now because we don't have to make that sales pitch, because experience has been structured now. It is part of licensing. Every state requires some element of proof of experience right now, or has been in that walled garden for a long time, but is being expanded to some degree. And, I think we're probably better out. Could it be without that structured experience proof? Sure. I think it could. I think we could go back to that. But it would be a relearning. And I think that the structure to the experience maybe needs to be redefined on some level. That, I have heard some say that states are different. I think that well, that state accreditation and experience, proofing can vary from state to state. That's an important thing to make sure is consistent. So maybe we could define or redefine, alter the definition of what experience is and how you get it. But I think we're probably better off with experience being in a structured, licensed environment.
Makes sense to me, Mark. And I kind of land on the same page, same side here. I do think it's worth reevaluating from time to time. What are we doing and why are we doing it? And is it actually working or not? In this particular case, I just see the struggles that those that have been appraising for a long time still have, to sometimes provide a credible appraisal report, and or you just come across things you haven't seen before, and trying to do that without any practical report writing and appraisal experience. I really don't believe would ultimately be promote the public's trust in the appraisers and in the appraisal profession if we just said take education, pass a test, and then good luck. I think that probably hurts rather than helps the profession in the long run. And I'm not an ultimate decision maker on that. We'll see how it plays out. But it was an interesting conversation based on the experience we've had individually and also working together, trying to help others gain this experience and move on to be effective and productive appraisers.
Very good, Jeff. Well, the last sort of sub bullet of the day is a topic really big in the appraisal community, and I think will be bigger in the appraisal community, and will be big to users of appraisal services, in 2026 and beyond. And that is uniform appraisal data standards and 3.6, the new forms, the new data standards that are coming across. Market Moves hasn't really talked much about this. We've even had Danny Wiley, Lyle Radke on both from Fannie and Freddie. We've had them on our podcast and have specifically talked about items and issues that are not that so far. And I thought that it might be worth touching on for a moment, bringing it up, and maybe only in so much as the reason why we aren't talking about it yet. I think I plan to. I'm sure you do too. We haven't talked about when and on what schedule yet, but we really aren't intentionally talking about UAD. And I thought it was worth bringing up 3.6 here just to maybe give some not going to public meetings and not fully aware of all the things that are happening, that, permission to not have delved deeply into it yet. Jeff, I think that it's okay to do that. And frankly, other than kind of macro cursory, that is a stance that you and I are not far from. I mean, maybe that's oversimplifying our awareness of it, but I think maybe the deeper understanding of it right now, it gives us permission to wait. There is no actionable platform really to get out there and say, okay, I've learned this. This is how it's going to be. I can now jump in and start working on things and playing with it and seeing what's going to look and feel. October is sort of the time to be ready. I think that isn't long from now, but it is not now, and it's 3.5, 4 months away. And even a lot of software providers are a ways away within today and those 3 or 4 months from being to a place to provide that playground for us. So I thought, Jeff, that that's kind of been my thinking all along here, and not talking about it so far, is that it's just not time to talk about it yet, and it will be. I think October will be for a lot of us, and maybe leading into October, be ready in October. But for a lot of others, 2026 is going to be the time to do it. So I don't know if you have any thoughts on the topic, but that's where I am.
Well, I will tell you, Mark, you're speaking blasphemy to our education provider friends and to our software provider friends who are, and I mean, I say that jokingly, but they've been living and breathing this stuff for a while. To your point, it's not available. It's not in the appraiser's hands yet. So how actionable is it? As you teed that up, it kind of occurred to me as well that it's really not that dissimilar from what we were just talking about with this experience thing, right? Like, you can take the education, you can pass a test, but you probably really need the experience to be a very good appraiser. I think with UAD, with this new version, it's a little bit similar. I can see a slideshow of what this is going to look like. I can be told what's going to happen and how I'm going to have to do things, but until my software provider actually makes it available for me to experience firsthand, it's just hard to know how to operationalize it. What do I actually do in my day-to-day practice without being able to use this new version? And I think that's kind of where I land, is you need to know what's coming. And certainly I've heard more, as much about it as I can internalize in the moment. But that said, you got to be able to use it before it's really going to be very meaningful. And the time is coming, to be sure, but none of the appraisal software providers, have an operating version in the hands of their user base, so far as I know, as of today. And I don't think they're even projecting anything, for at least another couple of months. So it's going to be very important to learn, to know, and to, understand well. But I just recently saw a scaled rollout for the biggest provider of the total software, which has the majority of the market share. And even then, it's not a total flip of the switch, but they're scaling up features and abilities within the software between now into, and I think through, the better part of 2026. So this thing's coming and it's going to matter, but it's also not here yet, is my take.
Jeff, I would predict also that it would be a little bumpy and iterative. So I think it's a massive change, and there may be a lot of good in it. I think there's potential to have a lot of good in it. If I look back at the original UADs, I think there has been quite a bit of good in communication, simplification of communication. A lot of problems too, for sure, but it, on the whole, has been pretty good in streamlining what we're doing. So, and then I'll say that much like our ongoing conversations with artificial intelligence, and trust the source and the urgency may be notated within a particular article or a post or a communication. Notate the source, because software provider hoping to gain market share in UAD. God love them. I hope that happens. It's a good opportunity for them. and they've been living it, as you've been saying. And those folks tend to be our content providers in all of our social media within our industry, in advertisements and periodicals and all that sort of stuff. So, it just makes sense for them to be talking a lot about it. And so I think we just need to take it all with a little bit of grain of salt. And, I'm William Wallace on the front line and Braveheart saying hold right now to the army of appraisers.
I like it. Well, I did like that we were going to tee up a topic to talk about why we weren't talking about something, and then we went on to talk about it for 5 or 10 minutes. So, change evolves, and we're here for it, and certainly not. I hear this narrative of appraisers saying, well, as soon as this comes and is mandatory, I'm out. And I think our approach and perspective is certainly the opposite of that. There will be a time to master it and fully embrace it, but in the moment, it feels kind of like you're reaching out for an air hug. There's not a whole lot to embrace until you actually have it in your hands. So,
amen to that, Jeff. Well, I think the near hour-long podcast here sort of fits the tumultuous set of the week that's been here, and enjoyed talking with you about it as well, and look forward to next week and July 4th, which we should not miss a record.
Well, at least you've committed us to it publicly, Mark. So we'll be back and ready to go next week. But fun as always, man. I appreciate it.
Have a great weekend, all.